Okay, now we're going to look at revising depreciation and then repairs and improvements for fixed assets. So we'll use the book example. Let's say we had a piece of equipment that we paid $140,000 for that our initial cost was, which also could include more than just the purchase price, as we know. The expected useful life was 5 years, estimated residual value was $10,000, and the annual depreciation was $26,000. So year one, I would have had an entry for depreciation expense and accumulated depreciation. This is year one. It would have been for 26,000. 0 there, I think. Yeah. 26,000, and for year two, I'm sorry, 26,000, and then I would have the same thing for year two. Debit depreciation expense for 26,000 and a credit to accumulated depreciation for 26,000. So those would be my journal entries for years 1 and 2. Then what the problem goes on to say is that at the end of the second year, and it's important it's at the end of the second year, which means we had 2 full years worth of depreciation already. If it was the middle or something like that, this would be different, but it says the end of the second year, so we've already done year 1 and 2's depreciation. We kind of go look at the machine and we kind of reevaluate, and we say, well, we think that now it has 8 more years. Okay, so not only does it not have just 5 to begin with, but it's got 8 more, and 2 years have already passed. And we also think that the residual value, instead of being $10,000, is now going to be $8,000. So what we don't do is we don't go backwards and redo our depreciation. Instead, this is an example of redoing an estimate, because that's what those were in the first place. Our useful life and all those were estimates. So I would instead do this going forward. So from this point forward, so I do it what we call prospectively. So from this point and from now on. So now I need to find my new annual depreciation. So I do that. First thing I need to find is my book value, because book value is how much I've got left to depreciate. But I need to also take out my revised residual value to find my new depreciable cost, my current or remaining, I should say remaining depreciable cost. So my book value, well, it was 140,000 as my initial cost, and I have 2 years of accumulated depreciation. So I've got 140,000 minus 26,000 twice, so a total of 52,000. So that gets me my current book value. So my current book value at the end of year 2 also would be the beginning of year 3, same thing. So that's my current book value. Next, I have my new revised residual value. So that is $8,000 where it was $10,000 before. So now I can find my remaining depreciable cost for $80,000 is my remaining. Now I can also use my remaining useful life. And now I can do my annual depreciation going forward. So I take my remaining useful life, in this case 8 years, and I take my remaining depreciable cost divided by remaining useful life to get $10,000 per year for my years remaining. So from this point, and realize this is a big change. I was depreciating this asset $26,000 for the first 2 years. Now, for the next 8 years, I'm going to be only depreciating it for $10,000. But I do not go backwards. A revised estimate is not a means, or doesn't necessitate going backwards and fixing other things. All it does is make us change going forward. And I do like the graphic that page 439 shows as far as how that change in estimate happens and where that comes in and what that does to the slope of the line for my depreciation, or for my book value in this case. The next thing I'm going to talk about in this video is repairs and improvements. So repairs and improvements can fall under 2 categories. Well, repairs and maintenance and improvements all fall under kind of 2 categories. The first would be revenue expenditures. This would be normal wear and tear. This would be things like getting your oil changed, getting some new tires on a vehicle, things that just happen in the normal wear and tear. Having to have a piece of machinery serviced on a regular basis, that's normal repairs. And that would be a revenue expenditure, meaning it would just be an expense. Revenue expenditure means we're just taking it straight to expense. So it gives an example of that. it says that for they had a delivery truck and they paid $300 for a tune-up, and that simply would just be a debit to repairs and maintenance expense and a credit to cash. Now, if I actually do an extraordinary repair, where I actually extend the useful life of something, that's going to be handled differently. So if it's just an ordinary maintenance, it's going to be, like I said, a debit to repairs and maintenance expense, and a credit to cash. In this case, the book said it was $300, okay, for a regular tune-up. If I have an extraordinary repair, this would be something out of the ordinary that I wouldn't normally do, and more importantly, it has to extend its useful life in some way. So if I completely overhaul a motor, or if I completely take the motor out of a vehicle and put a new one in, where it's basically, in a lot of ways, a brand new vehicle, at least the engine is a brand new vehicle at that point, then I have extended its useful life substantially. So how to handle that is I'd reduce my accumulated depreciation by how much I spent on the repair. So in this case, I spent $4,500 on the repair. So I'm reducing that because it's a contra asset. And I spent $4,500 in cash on that. And that would be an extraordinary repair. The other thing that can happen is I can actually improve an asset. So this would be adding to something. So an example here too, I could give from real world. When I was doing some audits, I used to audit cooperatives, and they'd have these grain augers, which are effectively these pieces of equipment that moved grain from one place to another, or moved it in and out of trucks, that kind of thing. And anytime they had a fair amount of money spent there, we'd have to ask them specific questions about, okay, was it extraordinary? Did you replace the whole, mechanical parts of it? Did you just replace some blades, some pieces and parts? Was it ordinary? Or the other thing is, did you improve it? Okay, did it used to be able to move, 100 bushels a minute, and now it can move 200 bushels a minute? That's an improvement. So an overall improvement is also handled differently. The delivery truck they use here, they're talking about how they put a hydraulic lift into the truck. So that's a complete improvement. It also adds value to the truck, generally speaking. So in that case, we're going to debit delivery truck, or whatever the asset was, and credit cash for whatever it is that I spent on that hydraulic lift, in this case $5,500. So different ordinary maintenance versus extraordinary repair versus an improvement. The next video, we're talking about disposal and selling of a fixed asset.